Hi, this is Landon Johnson. Welcome to our next episode of CyberTangent, entitled Cyber Insurance, Friend or Foe? I'm Landon Johnson, one of your cybersecurity professionals at Nehemiah Security, and I'm joined today by Rich Moore. Hi, Rich. How are you?
I'm well. How about yourself?
I'm great. Thank you. So Rich is the managing director at Alvarez Marsal in their global cyber risk services practice. Rich brings over 25 years of experience designing, leading, and maintaining the implementation and assurance frameworks for organizational information. Rich began his career with the U.S. Military Corps Intelligence Community, concluding his service as the Regimental Intelligence Chief. He then continued his passion for protecting information and creating sound cyber risk practices when he transitioned to the private sector as a consultant with KPMG and later on as the CISO at New York Life Insurance Company. Did I get it mostly right, Rich?
Yes, Marine Corps. That's about the only difference.
Okay. Oh, there you go. And tag teaming with me today is my colleague at Nehemiah Security, Jerry Caponera, who's our VP of Cyber Risk Strategies. Hi, Jerry.
Hey, Landon. How are you?
Good. All right, let's dig in, Rich. So I've seen stats that say things like 55% of U.S. firms have standalone cyber policies, while only 36% of UK firms do, and 30% in Germany. These are not super high numbers. Where would you say we are with the adoption of cyber insurance?
Oh, that's a great question. The adoption of cyber insurance is an interesting mix. One, I think that organizations still don't really understand the level and breadth of cyber insurance compared to their other types of insurance, whether that's general liability, first-party insurance, or first-party damages, or even through their their directors and officers insurance. So I'm not sure they actually understand the full ramifications of what the cyber insurance industry provides to them or can protect them from. So the adoption rate, I think, is higher in the U.S. because you've got the prudential regulators that are asking the question to organizations now, at least in the financial industry, on whether or not they have cyber insurance. So from an adoption perspective, I think the reasons why we're seeing it so low in the UK and in Germany, again, is that they want a much more clearer understanding of what entails a cyber insurance policy, what are they protected from, and whether or not it actually does any value to them.
Okay. So it sounds like it's a bit of wait and see.
For the other countries, yes. Like I said, in the US, the financial industry prudential regulators are actually asking those questions and almost enforcing the fact that they do have some type of cyber insurance.
Hey, Rich, do you think that with the changes in Europe with the GDPR and the enhanced regulations that they have, that you're going to see that be a trigger for growth in the cyber insurance market?
I don't. And the reason why I say that only from a first-party damages or a general property and casualty type insurance aspects, I don't see the adoption unless it's relevant to them and they actually understand what their crown jewels look like. They're very methodical in the way they approach it. I think there has to be some understanding of you're not transferring the risk to anyone, and you really got to take accountability of what those insurance policies mean. So for GDPR, while the fines are extremely high for not reporting or having a breach and failure to report, I think many companies will be able to answer the question or at least report in 72 hours, whereas the cyber insurance policies, depending on your broker, they have trigger events. They may be a smaller time frame for reporting or getting it sort of ready to go than the actual GDPR. So I don't think GDPR is going to have much of an impact on buying cyber insurance. I think it really comes down to understanding where your crown jewels are and how much you need to actually protect.
You mentioned risk transfer just a moment ago. In one of the recent council surveys, risk transfer was the leading response that organizations gave for why they were engaging with and utilizing cyber insurance. For the companies and businesses that you've seen utilize cyber insurance well within their business, Rich, how are they using it and why?
Sure, that's a great question. The ones that I've seen, at least, again, my financial industry background, That's really where I would focus in, and that includes, the insurance companies as well. It's really to protect themselves against third-party damages. And as we know, those are basically breaches to private information or non-public private information, NPPI or PPI, whatever world you live in. So basically, if you've got consumer information and it gets breached, that's what people are buying. So that's really where I see the businesses sort of buying that type of insurance. So, and again, as you know, you're not really transferring the risk. You still own it. It's still a reputational damage to you. It's still a recovery of a breach that you have to pay for. So really the third party cyber insurance that you're buying is really only covering you for that monitoring and some reparations that may need to occur.
For those companies that are out there in the wait and see mode, and for those using cyber insurance today, what have you seen are some of the biggest mistakes that organizations will make when thinking about or using cyber insurance?
So again, the biggest mistake is over quantifying your crown jewels. So most firms don't really understand the amount of revenue that their assets provide, and therefore maybe overestimate their cyber insurance policy, which I guess is okay if you never have to use it. But again, you're paying premiums on something that you may not have to purchase that amount. The other problem I see is, there's the questionnaires that you get for buying cyber insurance is really only between 10 to 20 questions. And then the chief information security officer or the chief information officer sit in the room and ask questions by all the brokers. And obviously the sub-brokers and et cetera, that goes down the list about their cyber program. There's really no technical assessments being performed on whether or not the organization can do what they say they do for their cyber insurance policy. So I think that's a mistake they take. In addition to, I think the third biggest mistake is not overlaying their other policies on top of each other, meaning you take that property and casualty, you take the third party, you take the first party damages, you take your directors and officers insurance and other types of insurances, and you lay those over on top of each other, and you see where cyber may be relevant in that perspective, and then you come up with a much better and clearer picture on what you're going to purchase.
So, Rich, one of the things I've seen over the years when it comes to cyber insurance and companies is that, and you kind of alluded to this, it seems like often they don't bring the CISO into the conversation when they're actually procuring the cyber insurance. And then often I've seen a CISO say, hey, look, here's the policy that our company got, and they have no input, yet they're now required to kind of abide and implement it, or basically, make sure it's not leveraged. How do you get a CISO more involved in the conversation around cyber insurance before it's procured instead of after?
Yeah, I think it depends on the organization itself. If you're fortunate to be a CISO in the risk world or be accountable to the risk organization or to the board of directors, then they are incorporated into that policy. I think that as chief information security officers begin to understand more about the business and how the business operates, they can really start to articulate the material risks to the organization outside of, quote unquote, the availability loss of the technology, but really the other aspects of a cyber loss, which include sort of the common confidentiality, integrity, availability, utility possession, etc., and authenticity. And if you look at those sort of 5 components, commonly called the Parkerian hexad, and you really begin to break down the material risk for each asset, I think the CISOs will become more available and more involved as they begin to understand how the business operates and not just focus on technology.
So let's play a little game called Fast Forward the Clock. So if we were to fast forward 5 years from now, let's say, what do you think will be some of the biggest changes we will see with respect to cyber insurance?
So number one, if I jump 5 years and I think about the increase of cyber losses, and there happens to be a systemic loss to a particular industry, I don't think that the insurance market could actually cover all the loss that's necessary. And so organizations, including those brokers and distributors of cyber insurance, will really need to understand how much capital is in the pool for insurers and whether or not they can sustain a systemic event across one industry. And I think about if in 2012, and again, I use history to talk about future, if we think about 2012 when the 25 banks were under attack from a distributed denial of service, and there was a requirement for them to all make claims on their cyber insurance, I don't know if the market could have handled it at that time if those 25 banks pulled in all of their cyber insurance claims. Mm-hmm. So if I think about fast forwarding 5 years in the future with the rise of cyber attacks, I don't know if organizations will be thinking about buying insurance, only for the simple fact that it might be easier to think about it as a material risk itself and therefore put aside capital reserves for a cyber event based upon your crown jewels and material risks. I don't know where insurance is going to be, but I would guess people are going to wake up and realize that perhaps cyber insurance is a good piece of insurance, just like your car, but not necessarily the amount that they'll ever claim, if that makes sense.
And it'll be interesting to see if that learning comes into play before we get a stress test on the system or after.
That's right.
Okay, so the title of our podcast, as you know, Rich, is CyberTangent. So we're going to go on a tangent just for a moment here. Let's think about this from the insurer standpoint. The global cyber insurance market could grow to, I've seen numbers like $5 billion in annual premiums by next year, 2018, and at least $7.5 billion by the end of the decade, according to a new report by PwC. It's not every day that a brand new insurance market like this pops up overnight. So it appears that there's a huge opportunity for these insurers to capitalize on this new market. Right from day one, it seems, the insurers have been criticized for high premiums, tight terms and conditions, restrictive limits, questionable payout policies and procedures. Here's my question. What is it that the insurers need to do well or to avoid in order to make sure that this model is as effective as it can be for both sides, the insurers and the insured?
Sure. I think it's a dismantling of the current way in which we do it, very similar to your automotive insurance. And I think we need to take that approach where you have certified adjusters that can come and evaluate a company's cyber program. Number one, to ensure that, the claims that will be processed are within the requirements of the language inside the contract. I think that organizations need to do more than twice a year annual recertification that they've got a cyber program, but actually, as we talked about, to stress test it and see if it's effective. I think as companies become more educated around cyber insurance, they're going to want to ask questions to the insurer about, not the insurer, but the actual company providing the insurance on, what are the clawbacks, what are the carve-outs. Again, if we think about nation state attacks becoming prevalent to many organizations in the U.S. and around the world, we have to come to an understanding on whether or not those are covered or not covered under the hostilities clause in cyber insurance contracts. I think those will have to become tighter. And so I think it's a combination of working with not only the federal agencies to understand what that means and with companies understanding how that means, but also better data on how many potential hostility acts may be included within their clawbacks and exclusionary clauses to their cyber insurance policies. I think those need to be a lot tighter. I think we need more education from the insurer to the insuree to understand what it is that they're buying. And again, I think there needs to be more actual stress testing and qualified adjusters to validate the insurance.
This brings us to an interesting point. In other forms of insurance, you can expect to get a pretty direct underwriting evaluation before you secure any insurance, right? If you're pursuing life insurance, you can expect to get a physical. Car insurance, they'll check your driving record. How are cyber insurers, if we're to jump into their process, how are they evaluating their insured clients today? And how's that likely?
Yeah. So hopefully it gets tighter again with actually qualified sort of adjusters or underwriters in this space. As it stands today, like I had mentioned earlier, either the chief information security officer or the chief information officer sits in a room and gets questioned by the companies that will be providing the insurance, including those subprime insurers that will be taking on the risk themselves. And so it's not very formalized. It's not very understood by either party what the questions really have to do with the insurance and protecting the organization. So I would like to see, much more in-depth questions. I'd like to see qualified individuals begin to understand. And of course, we need data, just like in any other insurance industry, to begin to understand. And I think now with the past decade or more, we should have at least a good start on leveraging that data and understanding what it is that we're trying to protect against. So that's what I'd like to see change.
Let me pick up the thread of data that you just mentioned. Over time, as we see this play out, it seems like insurers are going to have an interesting and valuable, perhaps, perspective on the wider cybersecurity landscape. If we can imagine that they're gathering up hundreds and maybe thousands and tens of thousands of clients and getting an intimate understanding of the breach activity within those clients and across those clients, they're going to have access to some valuable insights and data. How could that affect the role of insurers going forward?
Again, I think I want to just look at it from the perspective of automobile insurance. We just saw in the news one of the major chains buying some Tesla trucks that have some technology built in that allows them to sort of drive on their own, per se. How does that dynamic adjust the almost 100 years of data on automobile accidents when we're now mitigating some of that risk through automation? I think the same dynamics are in the cyber landscape. So as we begin to build data, the data also has to be more fine-tuned to adjust to the dynamic environment in which we live. Yes, we can come up with some broad topics or, categories of loss, but essentially it could change overnight and therefore potentially skew the data. And so insurers that offer cyber security policies or cyber insurance will have to understand that it's not going to be a static environment, and we'll have to begin to add new categories from emerging threats and understand that landscape. But again, it's going back to making sure that the companies have at least fundamental cyber security capabilities in place before they go ahead and issue these insurance policies.
Let's return from our tangent talking about the insurers. Let's get back to the insured organizations that are leveraging cyber insurance. How does cyber insurance fit into a company's overall cyber strategy?
It's really funny. The strategies that I have seen doesn't really take into account cyber insurance. And again, I think this goes back to your question of why isn't the CISO more involved in this? I think from a board of directors or an executive management committee practice, they just go ahead and buy the insurance through the risk or the financial organization without really understanding until it's been sort of procured the process and the risks that may be involved from a cyber perspective. So I think that as they're thinking about, the procurement and the coveraging, I think you really have to bring the information security department into your material risk conversations.
Does every company need cyber insurance?
I'm going to say no, but that's my opinion. And the reason why I say that again is if you've done your material risk well enough and you've done your stress testing and you've quantified sort of your crown jewels on that potential loss of revenue, I think you could actually put capital reserves on hand to cover those losses and mitigation activities.
We're closing in on our final questions, Rich. So we know that the security professionals are battling a fast-paced landscape on a daily basis. New attacks, previously unknown vulnerabilities, things are changing all the time. How can a comprehensive policy expect to cover everything a company might need for an entire year with all these unknowns and shifting landscapes?
Right now, again, I think cyber insurance, as we looked at the statistics, is really just looking at third-party damages and, again, covering on contracts. So I don't think that's going to change. That's pretty standard. But, again, we have to think about the exclusionary clauses and really fine-tune those a bit more. As far as investing in technologies and investing in areas where companies need to continue to increase, I think we continue to find the problem is not in the technology that we buy, but in the people and the processes that we've sort of let go stagnant over time. And so until we continue to stress test those areas that we feel in our companies are material risk, I think that the cyber shifting and the technology shifting and data will have to become more fine-tuned and dynamic in such a way that the categories are beneficial to both parties and understanding where they need to invest.
One final question for you, Rich. What advice would you give to a large enterprise CISO that's considering getting cyber insurance coverage?
Great question. So my advice to them would be make sure you look at all 4 or 5 other policies that you may have in your enterprise already. I would make sure that they overlay those and identify the areas that might be covered in technology and those areas that are not. And then I would begin to actually have a deeper conversation with your broker on how you get the best cyber insurance policy to protect your organization from things that you may not be able to protect against. And so those are the sort of strategies I'd have. And again, it's really understanding that revenue coming from your assets and what makes the business turn is really where they're going to need to have to focus to make good decisions in their cyber policy.
Great. Well, Rich, Managing Director, Alvarez and Marsal, Rich Moore, I appreciate it. Thank you very much for leading us in this conversation. This has been the episode of CyberTangent entitled Cyber Insurance, Friend or Foe, and we thank Rich Moore for leading us. Thank you, Rich.
Thank you for having me.